Good morning and welcome everyone to Schwab's YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market, and I'm your host, Kevin Horner, joining you from a beautiful Denver, Colorado today. As is usual, the case on a Wednesday, joined by my friend and fellow coach, Brent Moores. Good morning, Brent. How are things out there in Utah today?
A little chilly overnight. I think we hit a freeze last night, if I'm not mistaken. But it's fall. We're almost at Halloween, hey, it's good to be here.
It's right around the corner. You're absolutely right. It feels like this one has gone rather quickly. The transition from late summer into fall has happened rather speedily. But today we've got a big day on deck. We are going to be hearing from the FOMC and Fed Chair Powell today. So a decision on interest rates. So the market could expect to be a little bit volatile perhaps today. We'll talk a little bit about that. We'll look at yield charts and so forth, and just to set the table for the day as we usually do. So take a moment, say hi to Brent Moore's Ben Watson in the chat this morning. We have a couple of B's with us. So Ben Watson in the chat, Brent with me. Of course, Ben will manage and answer questions that Brent and I are unable to get to, but don't hesitate to post in there for the duration of our show. We'll go about 40 minutes in total here today as we work through the discussion. Make sure you're following the three of us on X, Ben Watson CS, Brent Moores CS, and Kevin Horner CS, the best way to meet up with us coaches outside of our classes here on the channel. So we would appreciate a follow there. All right, let's get to our disclosures and then the charts. First and foremost, remember that our discussion here is exclusively for your information and your education. We do not make recommendations. We do not make endorsements for any particular approach to trading the market here. We will, however, as we always do, discuss technical analysis. It's important to remember technical analysis is merely one piece of the decision-making puzzle. When we could talk technicals, we'll try to provide you with some educational concepts, some strategies traders might choose to employ, none of which are recommendations, of course. But ultimately, we discourage you from basing decisions exclusively off what you get from technicals. So utilize a multitude of factors is what we're getting at there. Okay, as far as our agenda, we take a top-down approach here in Trader Talk. So we're going to look at the biggest indices. We'll see the S&P 500, the NASDAQ 100, the Russell 2000, the semiconductor index, and work our way through some sectors that are on the move here today. We'll see if we can understand a little bit of today's narrative ahead of the policy decision. With that, we're going to start us off with the S&P 500. So, Brian, it just seems to be more of the same here of late. Try and deny the broad market rally, and you do so at your own peril. Doesn't seem like a train we need to be stepping in front of here, given the momentum we continue to see.
And you can, using the moving average, I think it can help us. It can aid us using that 20-day moving average, because that's been roughly how we've been going up. We've been kind of coming, bouncing off it, or maybe just a little bit below that 20-day, hit the 50-day a few times. But we've extended ourselves a little bit above that. And so it means we've had a pretty good run, and would not be shocked to see a little bit of a flag pattern here. And by flag pattern, I mean it going sideways or down a little bit for a short period of time before resuming a trend up. Now, who knows? This could be the the high that we see for the next year. I don't know, but I think most trend traders would probably say we're in an uptrend, and just if we do have a little bit of a pullback, it doesn't mean the trend's breaking. It just means we're taking a little breather, because the market takes breathers every once in a while. And so, I mean, that's where we're at. Now we have you mentioned the FOMC, the rates, and we can talk about that later and whatnot. But the movement on the market today may be more from comments than rates here today. So anyway, that's my take on the SPX there.
It's a good reminder, Brent, because you're right. The decision's one thing, and truth be told, if you've been watching this show or many of the shows for the last 3-4 weeks, we've been discussing the likelihood of a rate cut coming. In fact, I think the CME Fed tool today states that it's a 98% likelihood based on how traders are positioned, and yet it's actually been positioning that way for a long time. So a lot of this rally could be on the backs of this expectation, and perhaps we're going to see a little bit of profit taking following the announcement. A little buy the rumor, sell the news type situation could play out. So we have to at least bear that in mind. Now, Brent, there's a couple of things on this chart that are always going to bring traders to the table a little bit. And the first is the fact that we do have a lower high in the RSI right now. But you mentioned earlier, just a moment ago, that might just be a pause to the rally rather than a reversal, which is often the case, right? It's indicative of the rally taking a breather as opposed to turning and going the other direction.
Yeah, I mean, if you look at that RSI, look late July, early August, we had a lower high in there, and that, you know, not a shocker that the market maybe had a little bit of maybe a little pullback, maybe but it just continued to generally move up. And if you look throughout history, you can see similar things back in May to early June, little pullback and lower highs in the RSI. And so it's not, most traders do not take the RSI as a divergence in the RSI or weakening in the RSI as a standalone reason to just, turn completely bearish on the market.
Yeah, it's probably wise not to do that, right? You don't want to turn any of our indicators outside of price into the ultimate end-all, be-all indicator. No. There really isn't one. Now, as far as the trend is concerned, we talked about the 20 and we talk about the 50. In terms of management, you've seen the instances where we've tested the 20 and bounced. You've also seen that we've come below the 20 and maybe found the 50-day to be supportive. In terms of trade management, I want to remind traders that there's always a way to go about things that maybe puts you in a little bit more comfort. Some traders might be following the 20-day and say on 2 closes in a row below the 20 that holds the 50, maybe they lighten up a certain percentage of their trade. It's an important process to undertake every step, right, Brent? Because ultimately, if we're not taking action along the way to put ourselves in the proper amount of comfort, well, then when things do shift and do change, it's more likely we're unprepared for such a development.
Yeah, you need to plan ahead is the key. And that plan ahead could be things like lightening up on positions. It could be things like adjusting stop losses. And, it's not just for when the market pulls back. It could be, hey, look, we've just reached this new all-time high. Maybe that's a time to, ease off. Maybe you're a shorter term trader, ease off, and then you can possibly add a new position if we get to a little bit of a lower price. There's a lot of different ways to do it. We're not here to tell you exactly what way to do it, but you just did something on the chart, which I think is a key thing. In addition to moving averages, you can look for support levels, resistance levels. That was kind of a potential resistance at the time that we busted through. New potential support would not be a shocker by any means if the market pulled back to that level, which, by the way, is almost coincident with the 20-day moving average, and use that as a support level.
Yeah, as I've kicked it over here, Brent, we're going to kick it to the NASDAQ, but there's a great question in the chat about utilizing the moving averages here. And it ties more to time frame. If you're holding something a bit more long term, as is requested here, do you pay more attention to the 50-day moving average? And I think many traders might. And you say long term, I don't know that 50-day fits a long term viewpoint, Brent, but I do think it bears in mind that it may be more intermediate. But Brent, if I just eliminated the other moving averages, I think it'll highlight this pretty clearly. Looking at May 1, where the NASDAQ at 100 has been above the 50-day, we've only had one touch of the 50-day since, and it was right here. And I think ultimately the answer to the question is, well, where do you find support if not at the 50-day, right, Brent? You might be thinking, where would it fall to? What level do we look to if the 50-day is breached and expects lower lows? Well, or a lower level. Some traders, Brent, might look back at the most recent prior high somewhere in this vicinity, make that a line, something like this. But also, we have to be considerate of the longer term viewpoints that might take us back to a much lower level for consideration as well. Nobody wants to see that, but we have to at least consider it's a possibility if we violated the 50 days. So isn't it more a math problem than anything else? Just how much risk can I really take?
How much risk can you really take? And if one level, and just be aware, once one level breaks, then it's the next man up, so to speak. It's the next level that's going to come into play. If the 20 breaks, which happens relatively frequently, then we got the 50, which hasn't happened of late that frequently. And then you can look at support level, A and support level B, and there's always a lower level that you can hit. Now, hopefully we don't hit those levels, but you just got to be prepared to have those broken, because in terms of the pullback, if we were to go from where we're at right now to say the 24,000 level on the NASDAQ, what percentage pullback is that? That's about
8.5.
8.5. Okay, so 8.5. It's very 8.5 right now. It would be feeling pretty bad right now. Everybody here, most people here would be going like, "Oh my gosh, this is really bad."
It's true.
8.5. That happens quite often in the market. We haven't had it that recently. I mean, it was back into early in the year that we've seen that, but it's not like it's anything we call a rare occurrence. If you go back in time, an average year, we'll see a 10% pullback at some point. So 8.5 can happen. What about a 20% pullback? How far is it to the bigger line you had back there? That's let's measure it.
Let's just activate it and find out. Let's put it down here. How about 15%?
15%. Well, that's a bigger pullback. Most years you don't see a 15% pullback, but it's not like super, rare by any means. That happens. Back, I'm not sure what we had back at the beginning of the year, but back at COVID, we had a 35% pullback.
Yes.
It was a quick one, super quick one.
Yep.
And then, of course, the financial crisis, it was closer to 50% pullback. So, you just got to see how frequently these things occur and realize that there's no timetable on them. But in the grand scheme of things, an 8% pullback, which we all would be feeling uncomfortable about, that's really a significant possibility.
We have to at least consider it, right? Yeah. And again, one of the things that I have learned over my 28 years plus here is really that when you think you have a level that's going to hold, that becomes a challenge, right? Because inevitably what that means is that emotionally you've prepared to fall to a certain level. What you've not prepared to do is fall through that level, and you don't have the steps laid out as to how you will act if that occurs.
Yep.
So utilizing the NASDAQ, Brent, level 1 here at the white line, which I'm going to change. I'm just going to color code this to make this a little easier, green. And then we're going to call this one purple. So the thought process here, everybody, is if I don't think it can fall, I think it can fall to the green line, but certainly it's going to hold up at the green line. Why would I take action below that? Well, inevitably, that's when we start moving through the green line. We're unprepared for such a move. And now we're left holding the shares and throwing our hands up going, well, I guess I write it down to the purple line. But because we didn't think that the selling could get stronger or take you through a certain level, then you're ill prepared for that. So, man, that is a challenge, Brent. When it happens to exceed your levels that you've just laid out, I'll do this at this point, I'll do this at this point. If you don't go deeper, you're going to be unprepared for those bigger moves, unfortunately.
Yes, and let me just kind of address a comment that was in the chat. Yeah. Comment from Momo. Is there a playlist for leaps? And maybe, Ben, you could find something there, but how does one protect against long leaps? Well, hey, there are option strategies that sometimes people will use. We're not going to get into options right now, but let me just point out one thing. There's a class that's taught each week. I think Ben, correct me if I'm wrong, teaches it, called Trading Index Options. And when we talk about protection and we talk about index options, those sometimes those can be a common tool that informed options traders, and you need your education on it. That's why you watch the Trading Index Options webcast in terms of using options or index options. We're talking about the NASDAQ here as a means of trying to help protect an overall portfolio. There's a lot of different things we can do. We can talk about stop losses and this and that and that, but trading index options is one way to do it. So, you know what? Check out Ben's class there for some protection ideas using index options.
Yeah, great call out. In fact, he's hosting that one today, Brent. That'll be at 1 p.m. for us, Mountain Time, so 3 p.m. Eastern. Put that one on your calendar if you're looking to learn more about the characteristics of index options. It's very differently, quite a bit, actually, it turns out, from equities. So make sure you're aware of those discrepancies.
Yep.
Okay, Brent, let's kick off from the NASDAQ. Because again, I'll tell you what, the one thing traders have been pleased with is the consistency of these moves amongst the three big markets, the three big indexes here, the Russell, the NASDAQ 100, and the S&P 500, all showing signs of strength, all working against that 50-day moving average. Again, look at that. I mean, we've been above it again since May 2, 1 day behind the S&P and the NASDAQ 100 on the Russell 2000 here, and yet it's been the same thing, Brent. And the only difference is that this group, well, not the only difference, this one has also moved to a zone of new highs and is trying to break out on a longer term time frame as well.
It has. There's more correlation lately with the small. For a while, small caps were like just the odd man out in terms of the major indices. Lately, not so much. Lately, they've had this nice trend there. A nice trend doesn't mean the trend's going to continue forever, but lately, I mean, just looking at what it's done real well, along with the NASDAQ and the S&P 500. So the small caps have gotten their act together, so to speak. Probably doesn't hurt that interest rates have had a nice trend down, I guess, in that regard. And, we can look at trends going up and trends going down, or moves going up on interest rates and moves going down on interest rates. But they're kind of marching down, getting lower. That eases the path for small caps. And we've seen that reflected in the charts, I think.
Yep, we sure have. I mean, if we went to May peak in rates here from basically the most recent period, basically that's the same level we were at at the turn of the year here. So that was around 4.6, and it's been a pretty clear downtrend. We're 70 basis points under that. And again, if you look at where we were at the peak in May, here in yields, I mean, the look at the Russell in May, I'll just put the same window right here. How is that? What a shock, Brent. It all coincides with when the Russell got in gear. It was as rates peaked and have now shown a downtrend since. So it makes sense, right? It all stands up to reason as to why we've seen the Russell continue its strength as long as yields continue to be defined in a downtrend. That could change if the downtrend breaks, but there's a lot of work that would have to do to shove yields to the upside. Doesn't mean it can't happen, but I think the thing that bears watching here would be maybe the 50-day moving average, maybe my downtrending manually drawn line here, but I would ballpark it at around that 4.2 would be a pretty significant development if we got through that level, Brent, I would think.
Yeah. Let me just point out, this is a 10-year yield that we're looking at here right now, the 10-year note.
Yeah.
That is pretty relevant to different time frames of yields can apply to different things, but the 10-year is fairly heavily correlated to like corporate debt, which impacts small caps because they can be pretty debt reliant. It can also be pretty correlated. Doesn't mean it's the same number, but the general trend and stuff to like mortgage rates.
Yeah.
And if you look at a graph of mortgage rates, average 30-year mortgage rates have been coming down. Now they're up in the 6%, not the 4% here, but they've been getting lower. And so this certainly affects the economy, and it also affects people's portfolios because look, some people are bond traders, and the bonds, different bonds are change at different rates. Typically, longer duration bonds, so let's say 30-year bonds, move percentage-wise more, and we'll call that like duration risk or something like that. Longer term bonds move more on a percentage basis than shorter term bonds in general. And so I don't know, that's just a side. We look at this 10-year because it is really one that is kind of an overall indicator for like corporate debt and mortgage rates and stuff like that. And it's just kind of a proxy that we use for interest rates as a whole. And hey, they've been going down.
Yeah. And you're right. The 10-year, it impacts so many different areas, but it's not the end all be all.
Right.
Remind me, Brent, though, there is a tool here within Thinkorswim that highlights those rates, right? We don't have to necessarily see it on a chart here like we would in a trading scenario, but is it amongst our market watch or our tools where we could find mortgage rates if we wanted?
You can find mortgage rates. I have a ticker symbol, but you could also find it on the economic data, which is on the Analyze tab, economic data. Go back, click on the home, click on that, little home button. And then if you go to interest rates in the left-hand column, it's about the 5th or 6th one down there.
Oh, there we go.
And then that's what you can go to, there's a mortgage rates. There it is. You got it. Mortgage rate, and the very top one is your average mortgage rate there. And you can see that. And it goes back, to 1970, 1970 or something like that. So, boy, buying a house in about 1980, that would have been a little bit of an expensive proposition there unless you were paying cash for it, I guess. But you can see where we are in the terms of the grand scheme. And you can always zoom in on these charts a little bit, and you can see of late how things have been lowering a little bit here. They've been kind of coming down here. If you look at the last, inch of the graph or whatever there, you can see the lowering of rates there.
Well, I'm always helpful to be reminded of the power of Thinkorswim. The amount of data available to us here is incredible. And I thought this was an excellent opportunity to remind ourselves of what we can find if we wanted to spend an hour just kind of playing with what's available in the tool, doing so via the Analyze and the economic data. Don't forget to click home so you can see all that's available. It'd be pretty interesting here as it relates to the home yield or the 30-year fixed rate mortgage falling. Obviously, that's a positive. It happens to coincide with today's pending home sales announcement, which we are going to be getting in about 6.5-7 minutes, which is kind of notable as well, as traders are probably waiting to see if we can break through in housing. That space has been kind of a struggle of late. So always good to evaluate as much as we possibly can to look for our opportunities, everyone. Let's see about what's happening in the semis, which are showing a continued move to the upside, Brent. Now, this, I have a feeling, is tied to some news in the markets here this morning, which we'll get to momentarily, but a big move, 2.5%. And Brent, it looks like we've had, 3 gaps out of that consolidation window? I mean, this has been fantastic move in the last week.
It certainly has, and it's helped really drive the market up. When we were looking at the S&P 500 earlier, we saw that, this is kind of extended out quite a bit. Well, probably not a coincidence that the SOX has as well. The SOX can be tech can be a market leader. The SOX can be kind of a leader for tech even. And so that's what we're seeing. Nice extended move. And so this is the semiconductor index. So when you're thinking the semiconductor index, you can think of companies like NVIDIA, which we'll talk about in a minute, AMD, Micron, like AMAT, even though they don't directly manufacture semiconductors or an equipment maker, and Taiwan Semiconductor, those, all those are the types of stocks that we're talking about here.
Yep, some very familiar names, needless to say, right?
Yep.
Well, let's see here. Since we're looking at it, let's go ahead and just talk about that news story, Brent, because the big reason for this is tied to a coming merger announcement with Skyworks and Qorvo, and Qorvo Skyworks combined have seen a couple of upgrades. They've seen also some downgrades. We saw upgrades with KeyBank and Barclays and Piper Sandler and Citi. But on the other side of that table, Morgan Stanley has ended up downgrading one of the companies there, Qorvo, on the heels of that. So quick look at, so here's Qorvo. Oops, I'm trying to get my symbol in there. There you go. QRVO. So it's got a little pop today, up about 3%. And then the merger group, or the company with which it's merging here, Skyworks, up about 3.5%. What I find interesting, Brent, amongst the semiconductors, these are two that are clearly lagging the space. The group is at all-time highs. These two combined are showing recent improvements, but by no means the same pattern that you're seeing in your top players, your TSMs, your NVIDIAs, et cetera.
Right, but we've had a gap here yesterday, and then today we're up again a little bit. And I believe, if I'm not mistaken, we still have earnings coming out on these.
We do.
And so you could see a little more volatility. That's not bullish or bearish. I don't know where it's going, but coming out in the future on these. I mean, they've been doing okay, but they have not been the market leader. And keep in mind, in terms of like market cap, NVIDIA is going to be the biggest player in that space. Skyworks is down and Qorvo are down the path a little bit on that, but yeah, I mean that's helping to drive the index there.
It is, and again, granted, when you get analysts on both sides of the aisle, so you got upgrades to Skyworks, downgrades, and upgrades to Qorvo, and a downgrade to Qorvo. At least if nothing else, the number of analysts believing that it's a positive for the companies maybe implies that there's a little bit, or rather, maybe I infer that there's a little bit of synergy between the groups that would benefit these two companies going forward in their merged, their new merged entity. We'll see how that goes, but. There was also a little bit of headline here on NVIDIA yesterday announcing a collaboration with Oracle as well. And that has probably led to additional enthusiasm here in the space. And boy, Brent, you're going to be hard pressed to find a stock of this size moving at 5% clips. This is not necessarily normal.
Yes, this is the largest company in the world, everyone. And it may be, we're getting close. I don't know exactly how high it needs to go, but we're getting close to being a $5 trillion market cap on this company. So that's a trillion.
That's a lot.
That is a lot. And because of such, it's going to have the biggest impact on the S&P 500, the NASDAQ, SOX. It's a big mover, and the news, they and Oracle, right? Let's see, am I getting the company right?
It is Oracle, yes.
Yeah, sorry, I just got confused there for a second.
It's basically a joint venture to build Department of Energy's latest AI supercomputer to, according to my note here, dramatically accelerate scientific discovery, which sounds awfully vague.
Yes, it does, but they're talking about using 100,000 of those Blackwell chips.
Exactly.
NVIDIA Blackwell, and I imagine each chip isn't cheap either, probably. That is you can see why it's moving. And so, as you mentioned, Kev, 5% move on a almost $5 trillion company. That's like a 250. If I'm doing my math in my head right,
yeah,
almost a $250 billion move in market cap there in a day. Crazy.
And so what's interesting, Brent, is I read through these headlines and highlight the move in NVIDIA and look at the move in Oracle. They're a joint venture to do this. NVIDIA rallies 5%, Oracle sells off 3%, could be at support, I suppose, near that 50-day moving average. But I think it reminds us of what the story is really telling us. It's that there's going to be an enormous spend on Blackwell chips yet again for NVIDIA. So when you start entering into these agreements, well, then you start putting dollars to the number or to the story, and it all seems to benefit, again, NVIDIA, the largest company. So that starts to make some sense, doesn't it?
Yes, it does. And you can see that reflected in somewhat the analysts. I'm looking here. Melius Research raised firm's price target to $300 from $275. DA Davidson raised the firm's price target to $250 from $210 and keeps a buy rating. Bank of America raises the price target, etc. Down the list here as analysts are looking at NVIDIA, and like, this isn't like, oh, wow, this company, they've raised the price. This happens over and over again with NVIDIA's. It has happened. I don't know what the future is going to be, but that's why it's gotten to be the size it is.
Man, that is quite the impressive move. And then last thing I'm going to point out is one of my technical analysis 101 concepts that we've discussed quite a bit of late, Brent. It's the merit and benefit of consolidation periods. Consolidations lead to trending thereafter. And you could look at this period of time, probably 3 months in length here, perhaps, something like this, where we just really didn't go anywhere. I mean, we tried and got thrown back. And then once we got out of it, it's just been trend straight up. And that doesn't mean it's not likely to continue in a parabolic fashion, but as the trend slows a little bit, it is apt to work against a shorter or speedier moving average along the way.
Yeah, and that's what I want to see after stock moves up. If you're a bull, is you'd like to see, I mean, obviously you want it to go up forever, I guess, but realistically, it can only go up at such a high clip for a little while, and then it kind of, well, it consolidates, it rests, so to speak. It helps to establish and bring in more investors at that level, more traders at that level, where more traders are going to be more comfortable with that level, so that the idea of it, you know, the bubble popping, so to speak, becomes less likely after a consolidation period than after a just a parabolic move up.
Mm-hmm. Yep, I agree. And again, you know, one of the easy things to do is to say, hey, try and keep it simple, everybody. But I know that's hard to keep it simple, but fall back on your tenets of technical analysis when you have the opportunity to do so. As far as sectors on the move today, Brent, we're kind of in a little bit of a back and forth ahead of the FOMC. So the only thing that stands out to me, it's not even the move in tech, which is obviously tied to the semis move today. The thing that I think we should just mention is just the slight move in the VIX, which again, I think is just tied to the news on deck, meaning we're getting a slight tick higher as traders might be looking to position themselves for hedges here a little bit against that announcement coming at noon.
Yeah, I mean, that certainly can impact the market, and we could see some volatility there. And you know, there's still a lot of other things out there that can affect the market, but it has come down off the highs that we've had, but it can only go, I don't know. I think the uptick, what are we up about 3% or so today?
Yep.
Yeah, I think it's probably Fed related in this case.
I think so too. Fairly limited in scope, not necessarily concerning. Remember, when we get these big spikes, they tend not to last for terribly long. We do commonly see the throwbacks here. Since we're past now the 8 o'clock window, or 8 o'clock my time, and I used noon as our announcement time frame for the Fed. That's noon Mountain, so 2 p.m. Eastern. I did want to look quickly at the home builder index after the announcement. So quick, thought we'd take a peek at the index because it is under a bit of a struggle, Brent. You can see all my detail drawn in here. What I was looking at was this apparent head and shoulder top up here, following a wonderful rally utilizing the 20-day moving average, and then what was supportive along the way became resistance for us most recently, and we've been below it now for a bit. So we're in a little bit of a difficult spot here on the home builder side of things.
Yeah, and that level with the kind of orangish line is going to present presumably a pretty significant resistance level for this, with a little bit more clear sailing to the downside. That at least that's what the technicals are showing. Doesn't mean it's going to go down, but with a potential target that some traders would consider around that $20,000 point level on that. But so far we're down a little bit today on that, kind of continuing the down. Doesn't look like we're breaking the downtrend at this point anyway. We have lower highs, lower lows.
That's fair to suggest. Haven't busted it yet. The importance of that red line, if my drawn in head and shoulders is valid, and many would say it is now that we've made a lower low in that window there, this red line is the neckline of that head and shoulder top, and therefore becomes former support. It was supportive for us. Now it's become resistance for us. So a very important level. Now, because the head and shoulder top has been validated, some bearish traders are going to look to the level down here. That's what this white line is, the approximation of the bearish target. But it's just that. It's a bearish target. It's not a guarantee to be achieved. And if we did trade back up through this 24,000 level, perhaps even the 50-day moving average in purple there, well, then that changes this chart quite a bit. So I think that bears keeping in mind as well. Okay, Brent, more stuff in the news today. Microsoft made a pretty big move on an amended agreement with OpenAI yesterday. Thought we could put a detail on that. Goldman Sachs put a new price target on Microsoft at $630, it looks like, after this announcement. So it's a $250 billion commitment for Azure services, which supports not only Azure's growth, but validates Microsoft's position as a leading cloud provider for AI workloads, according to analysts at Goldman. So Morgan Stanley, Brent, also reiterated an overweight rating, and they put a 625 target on the stock. So again, targets aren't guarantees by any stretch to be achieved, but you'd be hard-pressed to find a bearish viewpoint on a chart like this. Take a look at this on the weekly, Brent.
Yeah, that's a nice long-term. That Microsoft has made a lot of people, a lot of its shareholders, a lot of money over the past 10 years. You can see on that. I don't know what the future is going to hold, and we'll learn a little bit more tonight because we have a bunch of earnings, huge earnings week, by the way, everybody.
Oh yeah.
Like this is of the earnings season. This is going to be the biggest earnings week of the season, just in terms of the companies that we're talking about. Microsoft and, well, tomorrow we have Apple and Amazon. Today we have Microsoft.
On my list today, and I'm sure you saw as well, United Health.
Yeah.
So the concern here, of course, is tied to that NVIDIA collab with Oracle and the Department of Energy, the AI supercomputer, et cetera, regarding scientific discovery. Evidently, what this leads us to is that United Health here has been downgraded by Deutsche Bank. Now, Brent, what's interesting to me is this is a notable time for a downgrade simply because of the action we've seen in United Health most recently. We've rallied close to that 200-day moving average, coming in around 388. Does this feel a little bit like maybe a technical downgrade as much as anything else? This seems a little uncommon.
So United Health has really had a rough time up until about August. And it was, I think for shareholders, it was like, this thing is just never going to turn around. We finally actually turned the corner, it appears. And so valuations actually improved pretty, the trend and the chart started to look much, much better. I'm not sure this is a major thing. We're down. I think I'm having a hard time seeing that. About 1.5%, 1.6% today or so.
Yeah.
It's not an earth-shaking downgrade that's necessarily going to break the trend. We're still at the 20-day moving average. We'll have to see where this goes from here. But yeah, I'm not sure that this may just be a reflection that, hey, it was down at 250 or so. We're now at 360, and it's just probably just a reflection of that. And technically, it's gone up maybe a little far, a little fast for Deutsche Bank.
Yeah, perhaps. I mean, it is a good move off the low there, about 60% or so to the peak we had yesterday. So that stands to reason. And they are stating, according to the analysts, that the firm thinks that the story on United Health has no wiggle room at their current valuations. Now, they did up the price target. It had previously been 275, so they upped it to 333. So, that's a little bit of a back and forth, a little bit of speaking out of both sides of their mouths, I guess. But they say it's all tied to essentially the turnaround of Optum Health. So that remains to be seen even still. But I thought that was kind of notable as well, especially from a downgrade standpoint. And then I had one more thing that came. Oh, I saw some of you posting about this. I don't have a story on my list, so I'm going to open up live news, and I'm just going to put FI in here for Fiserv, which has had a really rough day. It's off 43%. Clearly, they had a miss, so it stays on track for the record percentage decrease. Let's see. I'm looking for.
Looks like Fiserv to transfer stock listing from NYSE. It's about the 8th, 9th story down or so there. That'd be after after a bad earnings report. Not a great sign, obviously.
Obviously, yeah, they come in at $1.46, missing estimates, evidently. Of course, the market is just not happy with that, as you can see. And the reason I bring it up is that if you were looking at this chart, Brent, prior to today's announcement, you might have said, oh, we're in a downtrend. But, Brent, it can't go any lower. I mean, it's trading at 120. We should be feeling comfy and comfortable here, no? And then yet these kind of things happen. And I think it's just a good reminder of why we talk so much about what we do. Planning and being prepared and thinking about a worst case scenario that makes you very uncomfortable so you're prepared for it.
I would say almost every trader at some point has had in their minds the idea that, oh, this stock can't go any lower. But if you've been in the markets a while, every trader has been removed, has been disillusioned of that notion that the stock can't get any lower. They can always go lower. And I don't know where this is going, but it can go lower. I don't know if it will, but it can always go lower. No matter what the company is, no matter how popular the brand is or how much you love it or you think the product is great, it can go lower.
Yeah, it's an unfortunate reminder of the perils of trading the stock market, Brent. It is not a perfect animal, and it will humble you when you get a little bit head over skis. When you start feeling, as I like to say, when I start reading my press clippings, is when I tend to think that's a red flag. I'm like, start telling myself how well I'm doing in my trades.
Exactly.
It leads me to think, okay, maybe I need to pull back a little bit. Maybe I should take a breather. That's a decent red flag for me, has been, reading my own press clippings. So, all right, we're going to wrap it there. This has been a good conversation as usual. I hope everybody that's watching has enjoyed it. We've tried to cover a number of key topics for you all today. Don't worry. There is much more to come from us on the channel, as we'll be live all day for you, of course. Don't forget about that FOMC decision at 2 p.m. Eastern and the following discussion and commentary out of Fed Chair Powell at 2:30 p.m. Eastern. And beyond that, have a great rest of your Wednesday. Give us a thumbs up if you like that conversation today down below. Make sure you're following the three of us on X. And absolutely, be certain you're subscribed to the Schwab YouTube coaching channel. We hope you have a great Wednesday, everybody. Look forward to catching up with you again real soon.